I don't know if you can hear me.
Hao ni wafans wa Man U pengine wameenda kulala.
Wamekasirika juu, but ni sawa tu, sasa tutafanya nini?
Sina haja kukasirika, hii ni this is
Anyway,
hiyo ni kama kupigwa stop loss bwana.
anyway, good evening, guys, once more. I hope you've had a great week. So
Good
this is
evening,
how
good
we,
evening.
I think I can proceed. Since we came here late, I'll just spend a few minutes, and then tomorrow morning at 9:30, we're going to really do a lot.
Yeah.
So we'll just check on a few pairs, and all that. So I'm live on YouTube. At the same time, we are live here on Zoom. So yeah, from the economic calendar, tomorrow is on Monday. We have a bank holiday for Japanese yen. On Tuesday, we have CPI for Canadian dollar, 3:30 p.m. Kenyan time. That is 8:30 a.m. New York time. We also have retail sales for the US dollar. So these are the data that we have on Tuesday. So it's going to be a very busy week, by the way. And remember, we're going to also have 4MC fund rates on Wednesday, 9 p.m. So I think I'll be trading this 4MC. We might go live on that Wednesday in the evening. So I'll be talking to Jeff so that we can do a few sessions this week in matters to do with fundamentals, right? Now, so we have Wednesday, we have a CPI for the pound during the London session. We shall be having overnight trades for the Canadian dollar. That is during the New York session. That's around 4:45 p.m. Kenyan time. Then we also have a Bank of Canada press conference, 5:30 p.m. the same Wednesday. And then eventually we'll be closing our Wednesday at 9 p.m. with the rates for MC economic projection, right? And then on Thursday, we're going to have GDP for the New Zealand dollar, 1:45 a.m. Kenyan time. An employment change and an employment rate for Australian dollar as well, 4:30 a.m. That is during the Asian session. And then 2 p.m., we're going to have official bank rates for pound. And then we close our Thursday with unemployment claims for the US dollar. And then on Friday, we're going to have Japanese yen policy rates. We'll also be having Bank of Japan press conference, So we need to be very keen on those pairs that are listed with this red folder. It's very, very important to take note of whatever we have. This is whichever pair you trade based on this, it's very important. So I'm going to, because of time, I'll go straight to the technicals, just show you some highlights on the projections that we have in matters to do with swing moves and also the intraday levels. So starting with the dollar index. Somebody to confirm if you can see my screen. I've shared my trading view screen.
Yes, it's visible. It's visible.
All right, thank you. So this is the dollar index. And I remember last week when I was doing analysis, I showed you guys those two levels where we expected some reaction. This was the effect of the news that happened, I think, was it on Thursday? So I remember I told you these two levels. Either we'll have a reaction from this zone or we're going to have a reaction from the extreme zone. And I think it was based on, that was 1 hour time frame. It was based on the key levels. Those guys were understanding about pure bullish, pure bearish, bearish different and all that. So that's what we have. So with these, okay, I'll start with my weekly chart. On the weekly time frame, we can clearly see we've been bearish. We've been bearish because the swing points that we have this swing point here that caused this low. There was this, we had that swing point that caused that low. We also have this area. Probably on the daily time frame, you're going to see it very well. So we have this zone that price has reacted to the upside, but not yet. Structure-wise, yes, but does not confirm. But if you check on the daily time frame, or rather the daily structures, you'll see, let's just check, you'll see that the market is currently showing a reversal to the, continuation or rather to the upside. But where price is playing along, there's a likelihood we might drop down further, because on this area, rather on this level, I'm gonna highlight it for you guys. So we have this key zone. If you look at it very well, these are simple things when it comes to support and resistance. So when you look at these area, it's a key level. And the reason why as well it's a key level, initially price was reacting from here. See those reactions? Then now the market is also reacting from this zone to the downside. Why price came to this area? Guys, I always tell you that this liquidity concept is very powerful. Market broke to the downside, came back to this type 5, reacted to the downside, and then we could see price breaking below this low. And then again, the market came back to this type 5, then boom. So I'm looking forward to see the dollar to continue dropping to the downside. But remember, Wednesday will be our highlight in terms of where we are heading to. So that's what we have in terms of dollar. So for now, I'm going to maintain my bearish bias, the dollar. So I'm going to maintain my bearish bias on dollar. If I go to 4 hours chart, clearly we have had price breaking below this zone. And at the moment, we also had this momentum candlestick, price went back to this zone. And then, so I'm looking forward to see the dollar continuing to the downward direction. So that's my bias on the dollar. Now let's look at a few currency pairs. I'll start with the Euro USD. I'll check GBP USD. I'll also check on a few JPY pairs, and then we'll be looking at gold. And if there will be any other concern, we'll be able to share all together. So let's start with Euro USD, the projection of Euro USD. All right. Let's start with the monthly time frame and see where we are. Monthly time frame. This is our zone. Monthly time frame. All right. Then we have the daily time frame. Now, on the daily time frame, I wouldn't really say that we have a special case of liquidity here, because I really can't see any type of liquidity in this area, looking at the candlestick formation, rather the structures of the candlestick. So, but initially we had this area of liquidity, which is, I think, type 1. That's why once the market went to the downside, reacted on this pure bullish, you could see price coming back to consume this type 1 before it eventually came to take this low. Right? Up to that point, I hope you guys are following. Now, after the market took this low, sorry, I think I need to do a better highlight. So I'm saying we had price reacting from this type of liquidity, which is type 1. And then when there was that reaction, before that reaction, initially, if you turn the line graph, you'll clearly see we had this type of, this is an example of pure bullish structure, right? That's why price came reacted here. There's a way you do refinement to get an entry here. And then price went all the way, reacted on this type 1. And then after reacting on that zone, the market came and the market impulsively dropped. The market impulsively dropped from that zone after consuming liquidity. If you do refinement, you'll see it on 1 hour. Then the market sold, right? Look at how the market sold. And then you had price going up. And currently, I'm looking forward to see the market continuing to the upside so that it can go and consume this zone. We have this area at the top. So we have this area at the top. This is a zone that I'm looking forward to see price going to. Now, looking at the current price action that we have, and we're going to focus maybe on 4 hours. But even before we go to 4 hours, initially, we had these keys on. We had these keys on here. We have these highs, and we have had bullish body candlestick closing. I mean, you have body candlestick closing above these highs. That is an indication that the structure is confirming to continue being bullish. So whatever was happening, maybe we'll see it very well on 4 hours. Whatever was happening, these are just pullbacks before we continue, right? So the market was coming on the areas of liquidity. And what I can see, I'm expecting this market to continue pushing up. Because at the same time, from the other, from the dollar, we are looking forward to see dollar continuing to the downside. Are you guys following? Let me see on the chat section if you guys are following. Let me see on the chat section if you guys are following. Kindly let me see a reaction on the chat section if you guys are following. Remember, we're also live on YouTube. Make sure you follow our YouTube channel so that whenever we have such kind of meetings and sessions, you can always learn from there, right? Perfect. I can see Rain is in the meeting. Wilson is also in the meeting. Dalix. All right. I can also see Henry's in the meeting, right? So let's proceed. Job is also in the meeting. Who is HMD Global Nokia? I don't know who is that though, but let's just proceed. Now, when you look at the 4 hours structure, price was reacting from this zone because we have a flip level here. If you go to the line graph, I always tell you guys use the line graph very well. If you go to the line graph, the market was reacting from this flip level. See, the market was reacting from this flip level, and that's why you had these sells to the downside. And when the market came back, it reacted on this impure liquidity. So once you understand these concepts, you're gonna have the best experience in trading the liquidation concepts. Now, we had these buys that were supposed to be intraday, I think on Wednesday or Tuesday the other week, and then there was that news that happened on Thursday. I think I was with some guys in town. You guys saw me doing the analysis. So I don't remember what the news was, but there was news that was there on Thursday during the New York session. That's what caused that. So I expected probably price to come lower for us to buy, but it reacted on these. Check on it on 4 hours. It reacted probably on this pure bullish and went up. I'm expecting to see the market continuing to push up. And the reason why actually we have this sort of reactions, let me show you. The reason why we have these sorts of reactions here at this area, I want to show you. It's a key zone. Initially, let me make it clear. You see this area. Price is telling us that it's an important zone. Price is telling us that it's an important zone because it's like more of a resistance. But whatever is happening is liquidation. Price has been rejected, yes, there. But when it was going down, it was coming for this level. If you check on it, it's a structure which is more of like a flip zone. This coming week, tomorrow, Monday, I'm going to do a very thorough video explaining the types of flips, the special case, the normal flip. We have the round retest. I'll also be explaining examples of liquidity engineering. I'll do recordings of that and I'll share with you guys so that you learn how to take advantage. Because I noticed there are some people who don't understand the special case flip don't always happen most of the time, but the round retest and the normal flip, they happen a lot. So I'll share that with you as you go on with our classes. So price came reacted here. So I'm looking forward to see the market pushing further. My next target is to see this zone being broken, although we might have a reaction here depending on the momentum, because here we have a type of liquidity we call type 1. So if more probably you go to 30 minutes, or even before you go to 30 minutes, you can check on 1 hour. So we have an imbalance here, and we have a key zone as well here. So that's why price is doing whatever it's happening. So there's a likelihood of us pushing up further. If you go to 1 hour here, we have type, it's more of like type 1. We also have liquidity engineering at this area. If you put it in a line graph, you'll see it. Price took this high, this low was taken. So if the market comes, we might have a reaction here for some sales. So take note of that. So if I use 30 minutes because I was dwelling so much on 4 hours, then there's a clear liquidity engineering structure here, which could be a sell entry. But again, I told you guys, you need to understand the direction of the market. You know, we have pullbacks, continuation, or counter trends. So when you're taking a counter trend, I always say pullbacks are not guaranteed. So when you take, for example, if the market is generally buying and you take a counter trend trade, you should, if you normally risk 2%, instead of risking 2%, maybe you can risk 1% or 0.5%, right? Because in this case, it's better to take continuational trades than the pullback. But it depends also. If you are taking your trades on higher time frame, maybe a pullback that is on a monthly cycle could be a very long-term swing trade. You know, it depends. So as you go on, also in our morning live sessions, I'll give you some techniques that you can apply when you're looking for pullbacks that are what we call swing trades, right? Now, so we have that zone of that area. So I'm looking forward to see probably this price pushing up, and we might be breaking that high. And if you break this high, just know that we'll be heading to the next zone, which is around 1.183 price zone. That's what I have on. That's what I have on Euro USD. That's what I have on Euro USD. If you go further to the extreme point, at that particular area, I believe, let me check on weekly time frame. The time frame, monthly time frame, we have a case. We have type 3, more of like type 3 area of liquidity. It's like type 3. So I'm expecting to see price coming to this extreme point, and probably might even as well be coming to consume this area of liquidity that we have here. This is type 5. Other people call it an order block. That is bearish engulfing candlestick. So maybe that is our next target. So that's what we have on Euro USD. We'll check on GBP USD. Pound, dollar. As well, those guys that I was with, you saw me doing the analysis on GU. It was that nice push. So, guys, price moves in, you need to understand direction. Direction is everything. Price moves in 3 ways. Either it's bullish, bearish, or sideways. Then, if the trend is bullish, of course, you're going to have counter trends, which are bearish, or rather pullbacks, retracement, and all that. So from the monthly perspective, we've been bullish for some time. Okay, we've been bearish for some time, but when you look at the current trend from the downside, the current trend that we've been having, it's been bearish. It's been bullish, right? And this trend, this is forex.com. Let me see if other brokers give me what I want to see. Okay. Let's check FXN. Okay. All right. So we have this trend. You're bullish. I want to show you something. So you have that bullish trend. This is monthly time frame. So you've had these swing points. we've had these swing points, had this swing point that caused this high, then price came to react from this low that caused this high, and then again the market came back to react on this type 5, then it broke this high. So this is like a higher high, then this is a higher low from the monthly time frame. So higher high, and you have another high low. Now price has broken this high, and after breaking that high, from these, I think this was the month of let me see. From this, I think it was the month of July, we had a crazy bearish engulfing candlestick, and then we've had these also. We have from last month we've had a bullish candlestick, and it has traded above, but it closed above the open break of the other candlestick, which means there's a likelihood. And then again, the market has come down, so there's a likelihood we're going to break the 1.37895. So hence, I'm also bullish on GBP USD based on that analogy. So if I come to weekly time frame as well, you realize that we also have a bullish move, slight pullback, and then as price is pushing up, you can see the market came back here to react on this zone, went up. We've had slight retracement to these zones as well. So there's a high chance you're going to break to the upside, right? Maybe before eventually we will be coming back maybe to maybe around here, because if you check it very well, it's also an important zone that maybe the market will come before it continues to with the trend. Either comes here, react to the upside, or comes here and break to the downside. So having said that, let me show you something, guys. So you see this trend, this recent price action trend is on here. That is on weekly time frame. We really don't have anything that is clear, but let's check on what we have on daily time frame. On the daily time frame, we already have body candlestick that have closed above. Hold on just a moment. Oh. So we had this area of liquidity, which was type 5. Looking at it very well, you can clearly see. I hope you guys are following. Kindly let me get a confirmation. I want to know if you guys are following, and if you can get me loud and clear, if you can as well see my screen.
Yeah. Following loud and clear, coach.
All right, perfect. So the same kind of scenario for GBP USD, sorry, Euro USD. Price came, we had this type of liquidity. Other people call it an order block, this one here. The market reacted from that zone, went to the downside. And when price was going down, there's some hidden information that you can't see on the daily, but if you check on 4 hours and 1 hour, that's why price came to react on this area. We had some nice sales from, I think, the last 3 weeks back. It's some nice sales. So the daily time frame, I'm trying to see the price action. You already have a body candlestick that has closed above here, above this high, this bullish candlestick. Then the market came to the lowest end. I think if you check out 4 hours, you'll see it clearly. We have done a refinement of that. Those guys wenye tulikuwa na trade now news, mnakumbuka we had a very nice bullish move from this area. And what actually price is doing, in terms of liquidation, the market formed this swing. Show it. We have this swing low that caused this swing high. And then we've had this pullback that came to the extreme point of this area of liquidity, whereby we have the validation and the invalidation point. We have not had any candlestick closing below this zone, which tells me we might be heading also to the upside. Though below this zone, we have this key zone, which is an impure, we call it impure liquidity, type of liquidity. So there's also a possibility of the market coming to trade below this later on, react from here before we go up, right? But I want us to go a little bit deeper so that you guys understand some stuffs here. The 4 hours time frame. So if you check, okay, these are our validation of the 4 hour structure, then these are invalidation. Why do we consider these as invalidation, but not this one? Why? Why do we consider this, but not this one? Somebody tell me in the chat section, I need to know. Anyway, so we have this low. That caused that high. Price came back to consume liquidities around this extreme point. And now, we have that rejection, rather that key zone that has not been fully, if you look at the line graph, price has already traded above that area, but when it comes to candlestick confirmation, not yet. So if you go narrow, if you narrow down to 1 hour and 30 minutes, if you narrow down to 1 hour and 30 minutes, that's 1 hour. This market came to react on this imbalance. And there's this high, let me show you. There's this high that has been taken out. Price has come back and it's reacting on this zone of impure liquidity. So once the market opens tomorrow, a few hours from now, we'll probably get more buys. Probably get more buys. I'm gonna check 15 minutes and 30 minutes. Probably get more buys from this area. Why? Here we have type, what type of liquidity is this? It's more of like type 2. It's more of like type 2, although others will say because we have this candlestick, it's type 1, but it's more of like type 2. So in such a scenario, you're supposed to refine and get your entries to the extreme point of the wicks. So this is when we expect price to come and push up. This is when we expect price to come and push up. So let me check 30 minutes. And check on the 30 minutes. 30 minutes. Liquidation. High price came to the extreme point. This was Muse effect. Reacted here. So this is like reactive liquidity engineering. So 2 zones that we expect to see price reacting massively from. So we have that zone. Then we have this extreme point as well from here. You can see liquidity engineering. Yeah, so either price will react from here, buy massively, or continue with the buys, or we're gonna buy from these zones sharp. Once the market opens a few hours from now, we'll be getting more clarity during the London session, rather during the Asian session. After whatever happens, I'll be giving out clarity during the London session. But remember, Monday, sometimes the market really has no momentum, right? But I want you guys to be also keen at the Asian session on Mondays and see what happens. Observe and see what happens. So those are the zones that I'm looking to see. Pound continue pushing to the upside. Then we have gold. Let me talk about gold. That's true, Henry. So let's look at gold. Maybe we look at a few JPY pairs. Gold. So sorry for that, guys. So now I want us to scrutinize gold a little bit and look at the possible zones that we expect to have continuational buys. Eventually, I think I had said this in the previous meeting the other Sunday. These are very powerful zone. The day we will see gold coming back here, the day we'll see gold coming back to this zone, there are two things that will happen. If the market comes here, you're going to have a crazy push to the upside. Going to have a crazy push to the upside. But if price breaks below this zone, then you're going to have something that look like this. But my projection is to see, because initially this zone was a resistance, and hence we call this type of liquidity pure liquidity. So if price comes here, because this swing low goes this high, if the market comes down to this zone, know that it's going to be a very powerful zone to push price to the upside. That is from a swing perspective. But I want us to look at the most recent price action that we have in terms of daily time frame, 4 hours, and look at where we expect a reaction once the market opens up. Of course, price has never come to this area of liquidity. This is type what? Just draw with a different color. This is type, which type is this? Type 5, huh? That's type 5. So this could be a next zone. We will see price coming to. If you check on the weekly time frame, that area, we can't see anything on the weekly time frame. The monthly, also you can't see anything. So in terms of price, so on the daily time frame, we have that type of liquidity, which is a type 5. Others will call it order block. Others will call it bullish engulfing candlestick. If you go to time frame like 12 hours, you'll see some sort of price building up liquidity. So these are some that I expect price to come back later on before it buys. If you check 6 hours as well, we can see there was before we had this momentum candlestick, we had this build up, which is another technique that I'll teach you as we move on, before price went up. So at the end of the day, whenever we'll have crazy push to the downside, these are very good zone to see nice reaction to the upside. But I'm looking forward to, on the 4 hours time frame, the 4 hours time frame, at the top here, the highest price that gold has gone since it started being traded on the financial market, it's this one, around 36.70 level there, 36.75. And if you look at the structure, price is trying to print something. You know, the market communicates. The market communicates. And when it communicates to you, you need to listen. The market is communicating to you, you have to listen. So at this area, we can see hold on. Technically, sorry, technically, we had this high that caused this low, and then this low that was caused, price came retraced back. We'll see it on 30 minutes and reacted from this type 1 and went down. If you check on the candlestick closure, we don't have any candlestick that has closed below this. Hence, it has not yet confirmed to us that we will continue selling. But these are, we have structural formation and structural confirmation. So structural formation, we have bearish reaction to the downside, but we have not yet confirmed because we don't have a body candlestick that. Then if you go to 30 minutes, clearly on 30 minutes, we have that's type 1. So this is coming, this will be like, how do we call it? See, this is equal, what do you call it? Equal highs. This is liquidity. So we expect price to push up, and then maybe you can have a reaction to the downside, maybe to this area. But yeah, that is like, let me see how many pips are those. If price will come to that extreme point, that will be like almost 500 pips, almost around 500 or 490 pips. Now, sometimes gold is very interesting. These equal highs, equal highs that we have here, we don't have any candlestick body that has closed above that. So which means the market could decide to sell from here. So I'm anticipating tomorrow, once the market opens, we might push to the lower side around this area, because I can spot liquidity engineering, I can spot type 5, other people call it an order block. So I'm able to spot this zone as an interesting area to see a reaction to the upside. Why? We also have equal low reactions. You see these reactions. So these reactions, we'll see price coming. So before we sell, we'll see price coming here, then goes up, maybe before we sell, or even go up further. It depends. So this pullback is not guaranteed. But again, we don't have reference points to tell us that the market will sell. Maybe this high will be broken as well, right? So that's what I have on gold. And those guys who understand in pure liquidity, I took some buys here, I think on Friday based on these reactions. Yeah, Friday nilikuwa nachukua some buys hapa, because when you align these, you have what you call impure liquidity. Any zone that has a couple of touches, price being rejected to the downside, when the market tries to come back, other people call it break and retest, but me I call it impure liquidity. There are some principles that you follow. So if you were to do analysis, you're supposed to have your entry at that line and your stop loss within the zone where we have the weak overlap. If you go to 5 minutes, you could see where we have the weak overlap, we have a area of liquidity. And that's why. So in such a scenario, once you have your entry there, your stop loss is supposed to be either at the opening of this momentum candlestick or at the invalidation point. In short, I'm talking about that week. So this is a zone where we supposed to look for buys. So I'm expecting tomorrow, or I'm looking forward to see the market. Sorry, I'm looking forward to see the market coming down to this area before we get some nice buys. Hold on. If I look at my charts, I'm able to see liquidity engineering at that area of interest, which was type 1. So in the zone ambayo expect kuona the price. I hope you guys are keenly following. That's the zone that I'm expecting to see price reacting. Then we're gonna buy, right? So we have that liquidity engineering. So if I go to 5 minutes, I go to 5 minutes. Sorry, if I'm saying if I go to 5 minutes, I'm able to see that liquidity engineering around this zone. In fact, it's around here. Yeah, if we check on 1 hour time frame, that entry is on, is on the wicks, which is a type 1. So yeah, that's a type 1 on 15 minutes. On 15 minutes, if you check it as well, sorry, we also have some sort of type 1 with liquidity engineering. So some things you will see them clearly when you use a line graph. So we have liquidity engineering at that zone. Because I'm expecting to see price reacting from this area. Maybe we're gonna push up. So I want you to take note on those areas that we will be looking for sales, buys. So as far as I'm concerned, I'll be looking for buys because these areas are key zone. Price it's anticipated or expected to probably come back to this area. Here, we have some sort of rejection, and then price broke to the upside. So we still have an imbalance here. So I'm looking forward to see the market coming to the extreme, or rather to the bullish, different bullish, before we continue with the push to the upside. So once I have my entry there, sorry, once I have my buy entry from this particular zone, my first target is going to be here. Let me show you. My first target is going to be in that zone, and that will be like how many pips? Not like how many pips? Almost, yeah, 200, almost 240 pips. Then from that zone, that area is being broken. We'll be aiming to the next zone. Be aiming to the next zone. Let me change these colors. They look so, they're shouting a lot. Change the colors and reduce the opacity. Just a moment, guys, just a moment. Something like that. So I'll be looking forward to see price coming to this extreme point. So that's 30 minutes, just a little bit, just a moment. This zone, I want to refine it. So on 5 minutes, to show you the best area to have your TP, and it could be your possible next entry. Validation, okay. $100 pips, that's a lot. So we'll go to 1 minute. That market buys. I'll have my next entry or sells at that extreme point. How many pips are those? That one is not, that's fair enough. So I'll give an extra of few pips to the upside so that if that sell will be valid, then I'll be good to go. So my first area I'm anticipating to buy from is there. Then I might have sales from that zone. Henry, what do you have to say about that? So that's what I'm able to see from my end. So that's what I'm able to see from my end. When it comes to gold,
Actually, you have the same. I have the same thing as you. Hapo kwanza kwa kubai, hapo chini for buys.
for the buys,
Yeah, for buys I have it at the same zone or hapo chini extreme. If that place will not hold, let me give you coordinates of the extreme point that I'm looking at. I'm looking at. Just a minute. The extreme point is that I'm.
Give me the value, the coordinates.
The coordinates is 3619.96. That zone. That's the extreme point kama hiyo haita hold. Iko huko chini, yeah.
Makes sense. Makes sense. But for the aspect of liquidation, let me show you something. You look at this, how these candlesticks are being formed. So if you check on 4 hours, actually our entry, so we have our validation. Let me show you guys. So we have our validation and invalidation. So these, you see this area, this is validation, right? And then this area, try to make it, this candlestick here, so invalidation. So if this invalidation is violated, or at that point we have a body candlestick closing below this area on the 4 hours, then that means there's a high chance the story will change. So that's why I've actually refined that extreme point so that I can see the market pushing up. The first stop is that, our first target is around this area. Our second target is up here. If the momentum will be crazy enough or will be good enough, we might push and form new highs because the next target is 3700 price levels. If not so, we'll sell here to the downside. So I think that is it on gold. That was 4 hours. If you come back to 1 hour again as well, come back to 1 hour as well. Yeah, this area initially, it was a validation. They were in validation here. So the moment price went up, came down, price came to invalidate. Sorry. Price came to react on the invalidation point and pushed up. So for the aspect of liquidation, my best zone I'm expecting to see price to react from is 36.31. So there's a zone that Henry has mentioned, 36.19. When I look at that zone on 4 hours, I'm able to see some sort of candlestick. But these candlesticks are not clean. You see these wicks. Okay, check on 1 hour. Before the market continued going up, we had this wick that came to tap in, well, and went, So if you go to 15 minutes, yeah, liquidation has already happened there. So I really don't see any business at 36.19. I even go to 5 minutes unless there's anything that is hidden on 5 minutes. If I check on 5 minutes as well, price came back. These are fast liquidation. After this impulsive move, probably was news effect. We could see the market coming back to react on this. went up. Maybe the only thing is the reactive liquidity engineering. So if you will ever have an entry there, then the best zone to buy from will be here. Let me show you. Because of the reactive liquidity, if you'll ever have to buy, I'll take my buys at 36.15, that extreme point, the upside. But I really don't see any business here because when you understand the aspect of liquidation, price impulsively moved to the upside. The price impulsively moved to the upside. And then we saw another drop, which was a fast liquidation. Then from there, we see the market. Okay, let me use a different. So price went, impulsively moved up, came down, formed several liquidations, and then from there, another one, and all that. So if this zone fails, Henry, then my best zone to buy, the next zone to buy from is 36.15. 36, not even 36.19, it will be 36.15. Right? 36.15.
Oh, yeah.
So are we to get up to that point, guys? So that's what I have on gold. Reaction here, then we continue. We continue buying. First target there, second target, as we move on like that. So I hope mpaka hapo tuko sambamba. I believe up to that point, all of us, you're good. Is there any question or a concern, guys? Is there any question or a concern? Anyone? Because of time, let's end it there. I will have talked about the JPY pairs, but I'll talk about them tomorrow. I know JPY pairs, they always move during the Asian session a lot. Maybe you can look at one or two. Let's look at pound Japanese yen. Japanese yen, that's monthly. So we have that zone. Daily time frame. There's a likelihood of once the market opens, look at the structure very well. Already we have break of structure to the upside, this area, rather this zone. And market came to react on this key zone. So there's a high chance we might push up further. But I can see we have these area as well. And on this area, we have liquidity engineering. Because of this range, allow me to give you clarity tomorrow morning. So check on forward structure. Yes.
Can I just give the coordinates of GPY pairs?
In terms of swings or rather?
Possible buy swings that I have, and also some introduction one can take.
Okay, go on, please.
On the screen, make 199.772.
199?
199. 772.772.
199, 772. 199.772. Okay.
If you check there, the okay on 4 hours. If you go to 4 hours, there's a shift that has happened, and also you'll see that very well on 30 minutes. There's a engineering also, plus there's a type there. So that was my possible area to take the buys, but I will have to confirm Vizuri Asubuhi. But that's the zone. I have that as my marked zone. Because
All right, so we have that 199.954. It's the possible zone for buys because we have impure liquidity, right? Have impure liquidity, and it will probably be a very nice flip zone. So price might react either on the flip zone, the normal flip zone, or it might react from what we call special case, which I'll talk about. So guys, because of time, I don't want to keep you guys here for so long. Allow me to end the session here. And then tomorrow early in the morning at 9:30, we shall do our usual morning discussion so that I can give you nice intraday ideas. We'll break it live on Zoom, or rather, I mean on Discord, and then you guys will have a chance to watch. I mean to see how we get those nice trade ideas. So because of time, I don't want to go past here. It's already a few minutes to 11. I know you guys are tired. So let's end it here. Make sure tomorrow at 9:30, exactly 9:30 a.m., I'll be live on Discord stream, but not on Zoom. So make sure you join us so that we can go on with the live breakdown as we spot some nice intradays and continuational trade. And then those guys were supposed to have a class in the morning at 8:30. Because this link is public, I'll lock it. I'll only be allowing those guys who are supposed to be in class. So let's meet in the morning. You guys have a lovely night and a successful week ahead. See you tomorrow during the London session.